Good afternoon. Today is Friday. Finally, we are coming to the last trading day of the week, and overnight we have a bit of volatility in equity markets as well as in other asset classes. Now, today is June the 16th, and the time right now is 8 minutes past 12 in the afternoon. Now, let's get started. And I mentioned earlier on that yesterday we have a bit of volatility in financial markets. Essentially, the reason was because of 24 hours after the Fed paused its very aggressive rate hike since March of 2022, the market realized that maybe the end is almost near, and that created a sense of bravado among equity players who want to take the market higher. I'm of the opinion that this is highly dangerous because this market has gone up far too fast, and I think we are in the territory. It will not be an understatement to say that certain markets, especially tech stocks, are in seriously overbought situation here. Now, overnight, we have the release of the retail sales, which again surprised to the upside, showing that US consumers have been very resilient. They have been out there spending, and that is obviously going to be good for equity markets. So they took that as a good sign. So yesterday we have on average equity index rising on average about 1.2%, with the Nasdaq being the best performer, went up by 1.26%. So on the chart here, you can see that the Dow Jones has actually managed a marginal high, and we have 34,488, almost fourth, almost 34,489. So this is deeply into the territory, which I think is becoming very, very interesting, because the level that I'm watching will be 34,712.3, which is this horizontal red line over here, which incidentally is the January of 2022 high. So if this level is breached, it could change the dynamic for me. So I'm watching this level like a hawk here. In the meantime, I am more towards a calling for a temporary pullback in prices. Yesterday we did see a pullback, but it was quickly overcame by another rush to buy equities in the Dow. So basically, we have a new high traded into the beyond the May high. So right now we are already challenging the year high at 34,712.3. Okay, so watch out for this level here. In the S&P 500, obviously we are already in a new high for the last 14 months or so. So we can see that S&P 500 is at 4,439.2 within this bracket of prices, which I think put it in a very in contention for profit taking. So far, we haven't seen any serious profit taking. I think it's about time now. This level is 4,426 to 4,517. So if we do see a pullback, I think at the minimum, we can see prices coming back to test the 4,002 to 4,290 levels. Okay, over in the Nasdaq 100, this has been by far the superlative index that has taken the market so far high, and I think it's seriously in the situation in which it is seriously overbought. And the market actually tested the high of March 2022, and this is crucial. If it's breached, so far it has not. It came very, very close to breaching it, but it has not breached this level that I'm looking at is 15,265.4. Yesterday high was 15,246.6. So we are a hairbreadth away from picking up this level. And if we see continued advances in the Nasdaq 100 and eventually take out this level, like I said, very similar to the Dow Jones, it will change the dynamic for me. I have so far maintained that this tech stock rally is a little bit overdone, and maybe we can see a temporary pullback again, but the momentum suggests that we may see higher price, unfortunately. So let's keep an open mind here. Over in Asia, we can see that in the Nikkei 225 yesterday, we have a high of 33,767.1, and which has already taken out the June of 1990 high. This is a new 33-year high, and prices are a little bit soft this morning. It may result in further profit taking. If that happens, I think the area in which the market may be supported will be somewhere around 31,000 to 32,000 levels. So do watch out for the possibility of a temporary pullback here. Over in the Hang Seng, we saw the market ramp up beyond the pivot point of 19,521. Eventually today we see the market break clear. In fact, yesterday closing was very supportive of this scenario here, and if this is the case, I think the market may have enough momentum to take the market even higher to somewhere around 20,800 to 21,100. So this level will be a major hurdle to cross. Whether it can do that or not remains to be seen, but again, this is what may happen at least in the near term. Over in China, the market has been very robust this morning. It extended higher based on yesterday's closing price, and the market is expecting the People's Bank of China to eventually cut interest rates. We have already seen how the People's Republic Bank of China is trying to encourage spending by marginally cutting some of the reserve requirements for Chinese banks, and that gives the market the idea that soon the central banks is going to cut interest rates, which should theoretically stimulate the economy further, and this is the reason behind the latest rally in equity prices in China. But again, technically speaking, this market is in a very solid downtrend, so any major bounce here is possibly a chance for us to get in on the short side at a much higher price. Over in energy markets, we can see that crude oil prices actually managed to hold its own and rebound from $66.77. Again, the China story is playing out also in energy markets. Now market players do expect Chinese demand may actually maintain all the way till the end of 2023. Obviously, that would be good. And the other news that of course coming is that the US has been replenishing their strategic petroleum reserve, and of course that will be a bullish indicator. And on top of that, we saw the series of production cut by OPEC Plus has taken effect this month, and it may last until the end of August, especially for Saudi Arabia, which voluntarily took a production cut of 1 million barrels a day ending in August. So that should, for the time being, at least be supportive of energy prices. In the WTI, we may see prices continue to escalate higher, possibly to test the $77.85 to $80 per barrel. Now, when you look at this energy prices from a higher perspective in the daily time frame, you can see that there is that possibility that the market may actually do a three-wave rally here, and we have seen evident that this may be the case here. The low so far is $63.73, and we can clearly see a potential three-wave pattern developing here and targeting $77.85 to $80 per barrel. So what happened beyond that is anybody's guess, but we take one day at a time. Okay, over in energy prices, we can see that gold prices continue to consolidate. Although yesterday we saw a brief takeout of $1,935, which was a previous low here, to a new low of $1,925 before it start to bounce. Okay, so in the short term, this bounce here may see gold prices going back to test the $1,976 to $1,885 thereabout, and before it may actually come back down again. So for the time being, until the end of this month, I think we should expect further weakness in precious metal prices, especially in gold. But I think this is only temporary. I'm actually quite bullish over the medium to long term. I am definitely a buyer. I'm looking for levels to buy at a much lower level if that actually happens. Okay. Over in silver, we can see silver also managed to rebound off yesterday night low at $23.22 and is currently trading near the $24 per ounce level, and it may actually come back down. Whether it will extend higher remains to be seen, but I think there is the possibility that it may come back down and test the more recent low, which is the end of May. We have the low here at $22.68. So this level may be challenged one more time. Ideally, it forms a double bottom and then lay the groundwork for another rally attempt. Over in currency market, we can see the dollar actually moved aggressively lower, which is actually beyond my expectation. I was expecting dollar to actually hold its ground, but yesterday we saw the exact opposite. We saw wholesale selling of the dollar itself to the low in the dollar index at 101.67. Now this is about the extreme of this entire move here, because the market has already moved 200% from where the high was at 104.62. So if the market can stabilize at where it is this morning at a low of 101.67, then maybe the market may bounce a little bit before, who knows, maybe it will come back and test the high here traded in May. So basically, let's see whether that comes into being. So the worst case scenario is that we see another challenge of the May low, which is at 152. Okay, so let's watch out for that possibility as well. Now, over in the currencies, with the dollar coming back down, we see the other main principal currency all have rallied and rallied beyond my wildest imagination, because I do expect currency prices to actually fall relative to the dollar, but maybe we should be able to see one at least for an immediate pullback here, possibly forming a potential 5-wave here. And if that the case, we possibly will see a immediate pullback before the weekend itself. And if that's the case, maybe for next week we may see another rally attempt to complete this potential 5-wave rally on a 4 hours time frame. And in the sterling is a little bit of an enigma, because the market here has actually extended a lot higher than I expected. It has gone up to 127.93 overnight, and prices right now looks like it is right for a top here. So right now I'm not sure whether we should see a temporary pullback or a wholesale unraveling of this rally here. So in the meantime, I'm just going to stay neutral for sterling for the time being until the patterns firms up by itself. Over in Aussie, I think it's the same story. I think the Aussie may have overstretched itself all the way to just under 69 cents, and market now may be ripe for a pullback. If we see a pullback, it's likely to unfold in a 3-wave pattern, possibly targeting the 0.6675 region. Okay, dollar Canadian again has overstretched itself. It has gone down below the November 2022 low to a low of 132.10 this morning, and it possibly right for at least a technical rebound going into the weekend. And if that's the case, possibly the market will be kept just under 134 even. Dollar yen has broken out of its triangle pattern with a rush all the way to above 141.50, where it met its resistance before pulling back. But the market right now does looks like it may actually extend a little bit higher, possibly to test the November 22 high at 142.25. So I have no more any position in this pair here. Let's see whether this rally towards the November 22 high actually pans out. Okay, over in cryptocurrency, we're beginning to see a sign that perhaps there will be some more losses ahead for cryptocurrencies, especially Bitcoin here. Now, Bitcoin has actually went below $25,000 for the first time since the beginning of this year, and last night low was 24,756, with a bit of a rebound going on right now. But I think the upside will be quite limited, somewhere around the midpoint of this downside channel here. Possibly market will be kept, and then that may see another break of the 24,756 overnight low towards possibly the $23,000 level. So that level will be actually a lot more conducive, because when we look at the higher time frame in the daily, we can clearly see that the entire run up in prices from 19,569 is possibly still intact. We can see that the pullback, although it may look a little bit drastic on the lower time frame, but in the higher time frame like the daily, it does look like a 3-wave move here. And if this 3-wave here actually pans out, it should be targeting somewhere between $22,000 to $23,200. Okay, that should be laying the groundwork for another rally attempt sometime, who knows, maybe next month. Okay, so in the meantime, you stay safe, and I will come back to you with updates early next Monday. Bye bye, take care.